I just want to welcome the guys for joining this particular session. We'll be discussing a very interesting topic today. That's microinsurance. I think we are honored to have the person that I usually call the microinsurance master, right? And you'll really enjoy listening to him. He has quite a lengthy experience. He's really experienced in microinsurance matters. He has really managed to train so many people. I think but should be around 70 people, if I'm not wrong. Basically microinsurance masters across the world, and it is such a privilege and honor to have you joining us today. So these are the team of the people that we've been working with. They are basically insurtechs across the continent, representing 10 countries. It's really exciting that they are in this particular journey to look at how then can we be able to address the ever-widening protection gap. As a program, what we advocate and what we are looking for is how then can we become the solution towards this challenge that every time this particular continent is usually faced with. So we have a team from different countries, and the goal is one: how can we improve the insurance penetration across the continent? And as a team, we believe that microinsurance really plays an important role in bridging that particular gap, particularly looking at how then can we build inclusive, innovative insurance solutions across the continent. So guys, I want to basically introduce to you Bart. He's a great friend. We met some years back, so it's just like a reunion again. I had a chance to have Bart in Nairobi a couple of months ago, and this year the microinsurance master will be held in Nairobi. So quite a big privilege again to Kenya that will be hosting that particular program. And also just to mention, I'm happy that I'll also be supporting that particular component from the regulatory side. So I think a lot of synergies in how then we can support the continent in reducing that protection gap and building resilience across the continent. So I just want to welcome that so that I can take it from there. He has a couple of no slides that he wants to take us through, and then from there we'll just have a conversation. We are going to have a very interesting microinsurance conversation. I won't mention the second name because his second name is not micro, it's macro. So I'll allow him to mention his second name because I always get it wrong. So I don't want to fail this exam for, I think, might be the 10th time. So I've failed it 9 times and I don't want to make it right on this one time. So, but welcome, and take it from here, and then we are going to have a conversation. And I think, guys, you can hold on to your questions. We'll be able to get to them. We'll be able to have this discussion so that we get the right answers, because I believe that we got the person that has all the answers today. Thank you, Bart, welcome.
Thank you so much, Elias. Op de beek, that's how you would say it in Dutch, op de beek. But I'm okay with however you pronounce it. It's learning by doing, for sure. Thank you for having me here. It's a delight to be part of the session. I'm hopeful that we can meet the expectations that you've set, and in particular to respond to the questions that anyone here has. There's this great saying that if you speak, you're only repeating what you already know. And if you listen, then you can learn something new. So I hope that I will not be only repeating what I already know, but also will be learning from your questions and your comments. So looking forward to that. And yes, I'm delighted that to contribute to the BimaLab. And as you rightly pointed out, Elias, I run Microinsurance Master, which is a microinsurance accelerator program that is focusing on helping microinsurance leaders, CEOs, key decision makers from insurers, regulators, intermediaries, but also insurtechs to thrive in microinsurance. And we do this by an annual accelerator program. The 5th edition is starting in July in Kenya. And there's indeed quite some synergies that we can have between the BimaLab and Microinsurance Master. And so I'm really delighted that we're putting this into practice as we speak. And as Elias pointed out as well, also the other way around with Elias' involvement in the Microinsurance Master program. But enough about that. I can talk a bit later if you want to. What I intend to do here is to share some of the learnings that we collected from working with over 74 insurers, intermediaries, microinsurer practitioners at large in 31 countries. What are the do's and don'ts? How do people make a difference in microinsurance? But to get us going, I wanted maybe to start with a small quiz here. So I'm going to share my screen. That should be like this. Yep. Elias, can you give me a confirmation you're seeing things all right? Okay, cool. So this is us. This is our dream scenario. I'm going to present you a case study, a very quick one. So this is a case study. You're one of the top 5 retail insurers. You both have a life and non-life license. So there's no limits to that. In our market, we have a TAM, total addressable market, from about 80 million low-income families that we believe could be interested in buying insurance. And I just hired you all to be part of my board. It's going to be a very large board to manage, but that's my problem. But what I want to learn is, with this kind of a premise, us getting started, what would be your target number of clients that you would like me as the CEO of this company to get to by year 3? So maybe we can start with the chat. And if you in the chat could maybe put in some numbers that you think that should be reasonable, doable, audacious, the target that you would want to set if you were on a board of a company with this one. 5% market share is the first attempt. So that now I need to calculate, that's 4 million, is that correct? 10%. So, okay. 120, 200,000. Okay, 1 to 3 million. Okay. We're with over 30 on the call. It would be great to get your thoughts here. Also, make a mental note or write them down on paper. I will only proceed if I have about 20 answers in. I want to see how the majority of the board here thinks. So in this market, 80 million is the micro market. We define them as the group that is not retail, but then again, not too poor to buy insurance. It's not people who are just on social welfare, like that gap. How many people should we reach by year 3? Please put your answers in the chat. We have 5 so far. That's a good start, but our board here is more than that. So I hope to receive some more answers before I proceed. Okay. So that's one more. $800,000, 1 million, 1 to 3 million, 5, 10%. Okay. Good, great. I see some answers coming in. All right, you discovered the chat. That's great. So it looks like I'm not good at doing averages here out of my head, but looks like it's around 1 million mark. We have 200, 300,000, 500, 1 million, 1 million, 1 million, 3 million, 3 to 4 million. So that's the ambitions. So let's see how I can do. So we're going to fast forward to year 3, and I'm going to share with you my first numbers for the first 3 years. And let's see how you think of it. So this is our in our case study where we land after year 3. So the numbers are in thousands. So that means that by year 3, I achieved the lower target that somebody gave here, which is the 120,000 number of enrollments of clients with $600,000 dollars in premium income. We actually hardly had any claims, so even too little to mention. However, we feel like we are onto something. We're having exciting discussions with potential partners. So I would ask you to allow me to proceed with keeping the same numbers. So the same targets that you've put, I would like to proceed for 2 more years and then report back. Is there any objections to that? Is anyone objecting against that? Then you can put it in the chat, or you can raise your hand and let me know. No, we have a very collaborative board, so it seems that everyone agrees. So I'm gonna add 2 more years of hard work with me and my team to reach your target that you've set to get to about 1 million or 3 to 4 million as you expected, or even the 10%, which would be 8 million and more. Let's see. So by year 5, I'm at 600,000 enrollments, 611,000 enrollments, 2.8 million of premium income and 2.6 million of claims. So that means that we're not breaking the bank. We can pay all our claims. We can honor all our claims with the premium we receive, but obviously the margins are very thin. We believe that by paying claims, more people see the value of insurance. But this is a time I would like you to get an explicit mandate if you want me to proceed or stop. So can you give me a thumbs up or a thumbs down in the chat? If you say thumbs up, that means that I can proceed. If you say you spend enough of money and enough of time, then I will stop here. So what's your advice? Kindly use the chat to give me some advice on how to proceed here. If you put thumbs up like this, then it means that I can proceed. Somebody wants to invest right now. That's cool. Okay, so most of you allow me to proceed, even though I'm not even at the target of the year 5 that we set for year 3. But I'm getting some nods that I can proceed on my plan. All right, good. That's what I'm going to do. So let's see where we're heading next. This is year 7. So I need to admit something, board. So we reached to about 1 million of customers now, which is where you wanted me to be. However, as you can see in the market, we had quite some setback. So we had a lot of claims. In fact, we had way more claims than we had premium income. So we received about 5 million of premium, 5.2 million. But we had this year, we had some calamities to cover, meaning that we had a lot of claims reaching 7.5 million. Most of our competitors, most of our insurers, they're ending their schemes, they're stopping, they're withdrawing from the micro market. I again would like to ask you what you would like me to do. Shall we stop as well? So far, we haven't really made a lot of money. We have shown that we can grow a little bit, but it's taken us longer than we would hope for. By year 7, we were where you wanted us to be by year 3. Kindly give me a thumbs up or thumbs down. If you want to step out, this is the time. Then we call it a day, we proceed with retail, and we withdraw from the micro market. All right. I get some mixed figure here. So thumbs up, thumbs down. I have a very supportive board, it seems, overall. That's a bit mixed. So we're not all aligned anymore. That's clear. So who says thumbs down? Please add some more. Thumbs up, please, as well. Okay, I see some more thumbs up. All right, it seems mixed. If we have to put it to a vote, it's not that we are unanimous anymore. So let me show you what happens now. I will proceed with the blessing of the majority. And look at this now. 2 more years, and I can share that we finally hit through the ceiling. We went from 900,000 to 18 million enrollments. And we have about 18 million of premium income, and we've been able to reduce the claims to 4.5 million. It appears to be true that claims pay off, and that claims is a good way to invest in our future growth. People have experienced insurance, and this is how we have grown. So I think that by now, we well exceeded the initial expectations of reaching 10% of the market. We're actually at 18 million out of a market of 80, which is quite far, but it has taken us way longer than we have hoped for. This is not a fictive case study. This is the actual numbers from Pioneer Insurance in the Philippines. Where you can see the logo on the screen. They have a market share of about 20 million in 2019 before COVID, out of a market of 80 million. There's no other insurer that has reached such a market penetration in microinsurance. And in hindsight, this is making a lot of sense. But I can tell you, in the early days, when you have those small numbers with 30,000 enrollments, 1 in 20,000 enrollments, you will get very nervous board and a very nervous set of investors. And this is what I would like to refer to as the inconvenient truth in microinsurance, is that it just takes a lot of time in order to grow, in order to have people to experience insurance and to really do. So that means that you need to be very patient. And the future you will curse you if you are now overpromising on your investors. If you go to your investors and you promise them the moon in 3 years, in 5 years, then even though if you might have hit 1 million, 2 million clients, if you promise them double or triple of that, then they will still be disappointed that you haven't even reached your target. So even though while it's very hard in the early days, make sure that you don't overpromise. The early days is a lot about learning, figuring out product market fit. What's your niche? What's the customer segment that you want to reach? And this is where I see a lot of insurers and insurtechs fail. Not that they're not making any traction, but that they have set the bar for them too high. And as such, they get disappointed returns and disappointed investors who don't want to proceed. So this is a true lesson from the Philippines, but it's equally valid in other markets. This is a fantastic case study and a host for our microinsurance master program. We can touch upon this case later on, but I hope it's also a lesson for you that when you with your insurtech are after funding, that you're after partnerships that take always a long-term perspective. It will take time. Luckily for us and for you, Pioneer, when they started in 28, 29, they were basically the pioneers, literally. They had to figure things out on their own. And so they had to pay a lot of money and time to get it straight. By now, we have a lot of lessons from them and other pioneers. And so we can fast track and condense that first period. So it shouldn't take you 5 to 7 years anymore before you get any traction. If you listen well, if you adapt the lessons from others, then probably you can speed up quite a bit. But still, it will take you some time, and it will take you some longer than you would hope for, as with any innovation, and in particular with insurance. I have one more slide, but let me stop here for a moment and see, Elias, if you have any comments or questions on this so far.
Yeah, so Right. So I think that's very interesting case study from the Philippines, kind of indicating the journey of a truly microinsurance company and how this particular progress has kind of impacted the Philippines and Pioneer Insurance. So I think great learning here is that claims sometimes can be payment of claims can be a very good marketing tool that kind of goes beyond just having a very good, I would say, distribution component or distribution platform. But can people really talk to the others that, look, through this particular program, we managed to get some good solution on the challenges that we are facing as a community or as a business, and that kind of open doors to other people really going for these kinds of products. Something that also I've managed to see here is microinsurance is a game of large numbers. So as you get a bigger pool of customers, kind of you kind of manage the risk on that particular aspect. Yeah, so I've seen there's a hand that has been raised. Maybe I'll just allow Dara to ask that question quickly before we allow Bart to continue. Dara.
Thank you. Can you hear me?
Yep.
Yes, we can hear you.
Yeah, I'm super intrigued by how you took us through this case study. Kind of like it feels like real life scenario. So how do you then the challenge that I think a lot of founders then face is you are in a marketplace where you're competing with funding for fintechs, with companies who are probably going to be able to deliver faster growth. How do we then position insurance really as something really worth or exciting enough to invest in? Or does it mean that it's only really long-term investors really that are a fit for insurance?
Yeah, Dara, that's a great question, and it is indeed a real case. So this is not the numbers are not made up. This is how it went for this insurance company, and luckily, I mean, they had their other business, the retail business, the corporate business that they could work from. Interestingly, they have been, apart from 1 year, always been able to honor all of the claims from the premium that they have received. Only in terms of the operations, they had some shoulders to land on. So it's an interesting question because it begs the question. So you can now promise the moon and you can try to compete with higher yields of investment and fintechs who can maybe grow quicker. And maybe you can succeed in kind of making a brighter story. But if you're not delivering onto that story in 3 years, what have you done basically? You might have kind of get a short-term gain, and then it will fail flat. So it's very tempting. I agree with you then now to kind of to make very large predictions and promises and forecasts that are basically all built on assumptions. But truth to be told is that in insurance, it is just taking a longer time because insurance is not a product that is being bought. It needs to be sold because it's not an instant gratification that you get with buying insurance, right? If you go to the candy store and you buy a candy, you taste it, you like it, you go back in and you buy 10 more. But what happens the moment you buy insurance? Nothing really. I mean, it's not that you instantly feel delighted, that you feel empowered, that you instantly see like what is the benefit of insurance. And I think that's the underlying thing, is that you want to have a set of investors on board that understand the business of insurance, and that understand that in order to grow, as the graph shows here, that you will have people to taste insurance. And how can people taste insurance? It's through claims. So what you want to do in the early days is to really design for learnings outcome. What you want to do in the early days is design for claims, a lot of claims frequency. so that a lot of people can experience insurance and that you can grow through by word of mouth. This insurer actually never really invested in huge marketing campaigns, in radio ads or TV ads. They really grew through word of mouth and partnerships. And you can see what happened here, right? So in 2014, they had 7.5 million of claims out of 5 million of premium. So now in hindsight, that makes a lot of sense. But if you look at the graph, how it was, it's quite devastating, isn't it? But then if you see how that paid off, I mean, bad you, that's a worthwhile investment. They skyrocketed. They went from the next year, they went 8 times. They went to 2016, they grew to 18 million enrollments. So if you look at that, just from over a period of 5 years, from 2011 to 2016, they grew from 260,000 to 2016, 18 million enrollments. So that's the kind of hockey stick growth that investors should be excited about. So I think, for instance, by showing this graph as an example of like a real case in microinsurance, it can help you to educate your investors about the nature and the business of insurance, and to get the right set of investors on board. I am with you that it won't be easy, but I'm hopeful with you that you will find a growing group of insurers and investors who see and understand how the insurance works and are willing to put in the necessary capital and patience that you will need to grow to similar figures like these. Let's hope so.
Thank you. Very helpful.
Right. Thank you, Dara. And maybe just before you go to the next slide, I usually say that when you talk about microinsurance, there are so many connotations that people come up with, from just looking at it from a low premium type of a product to a product that is targeting those people that are currently underserved. So maybe from where you sit, but what would you term as microinsurance? Because I know these are terms that has kind of been misused for the longest time possible, but also there are different definitions that come with it. So yeah, maybe you can take us through that for those guys that might really want to know what micro insurance is, and then from there we'll take it from after you kind of present your next slides.
Sure. Yes, and I agree. There is a lot of similar terms that go around and some overlap, but they're not always like a one-on-one. You have inclusive insurance, which is more used in donor and regulatory circles. Some refer to it impact insurers. Then you have large insurance groups, AXA and Allianz, for instance, who refer to this as emerging consumers or emerging customers, as they say that people don't like insurance and insurers don't like micro. But ultimately, I think that that's what is intended, or what I mean with microinsurance, which is also, by the way, how the International Association of Insurance Supervisors defines it. It's insurance solutions that are targeted to low-income household, low-income earners. So, and the difference with some of the other terms is that inclusive insurance can also be understood as other people who are excluded for other reasons out of insurance, etc. So, what we here really have the focus is on the market segment that is below the retail market. It's not the people who need to rely on grants and government grants and subsidy and solidarity mechanisms. So there is still, unfortunately, a layer or a group of people below that who can't even afford this kind of schemes. So typically we talk about insurance policies that are free, bundled, in the range of a few dollars a month, a year, so that people can afford it, and that provide an assistance rather than an indemnity, which would be to refund whatever damage you have, but that are there in times of need, that provide you with a funeral assistance, with a hospital assistance, with an assistance when your harvest fails. That would be how I would like to describe microinsurance.
Yeah, quite interesting connotations there. I think you kind of managed to bring three elements into that: micro, inclusive, and impact insurance. And again, right now you'll hear organizations talking about emerging consumers, and that kind of also reflects on some of the key elements that microinsurance do touch. So I've seen a comment here from Pazio that this really requires, basically the graph requires a very patient investor. So more of like, how then do you de-risk some of this? I know we'll be kind of diving deep into that. So maybe allow you to complete your slides, then we get to some questions here.
Yeah. So once again, so I want to paint this picture because this is, I think, a lot of the failures, if I can call it that way, in our sector in microinsurance is because we started off from a wrong footing, and we indeed promised the moon just to get the project going, and that can be very yeah, it's a tactic that works in the short term, but it's not going to make sure that this kind of you will realize this kind of a growth. Luckily, with the programs like BimaLab and Microinsurance Master that I run, we can now condense this early time. That's, I think, one a promise or one kind of objective that we have is like, there is a ton of lessons out there by now, so you don't need to repeat the same mistakes that others made. But it still will take time, and one of the reasons is because microinsurance is in most cases not a solo endeavor. Like, for instance, in microfinance, where you can just start a microfinance institution and you can create your own ecosystem. In microinsurance, it's very often a partnership. And allow me to go to the next slide, and that's the last slide I have. And so both are on our website. I will share the links thereafter, which actually says that if you look at microinsurance, in most cases, it was also reconfirmed by the latest landscape study by the Microinsurance Network. Microinsurance is best conceived as a B2B2C endeavor. That means that you need an insurer who's taking the risk. The insurer doesn't have an outreach in low-income communities, in the villages, and what have you. So they need a distribution partner who has a trusted relationship with the people you want to reach. That could be a Boda association, a motor taxi association, that could be a microfinance institution, that could be a farmer cooperative, but a trusted organization that you can work with. The graph I just showed from Pioneer, they do no direct-to-consumer business. So even though they're reaching 1 in 4 of the total addressable market, everything is done through partnerships. And I think that is key. And then obviously, you need to be very customer-centric. And I think that's also a little bit where I would like to center our talk here around, is that how can insurtechs help to build that ecosystem? And how can they help insurers, intermediaries, last mile organizations to make this happen and to accelerate their activities? And that actually also brings back a little bit of the question on the investors, is how much of investors do you need, as compared to, can you also work with insurers and others that could provide you with contracts, operations, funding, that you can do that? But that's another question that we can tackle later on. I'm just going to give you some of the key highlights here, and then we can go into detail later on about that. These lessons here, they're built on our experience with Microinsurance Master. As I said, we're working with over 74 insurers in 31 markets. And that's the lessons that we have distilled from them, and that we think are really key in order to succeed, to thrive in microinsurance. First and foremost, you need to be customer-centric. Too many insurers just push products into the market and then they hope that they will stick to the wall. That won't work. You first need to understand customer needs, and then you need to build solutions from those understanding. This is the first place where insurtechs can help. Insurers are not very good at going out, listening to clients. If you can help them to identify market opportunities or needs that exist in the community, I think this is already one place that you can really help them. Also, second, you want to design a first-line support. I think this is a key difference with retail insurance. That is, you don't want to indemnify a loss. It's not the full loss of the car that you need to compensate. It's not the full hospital bill that you need to care for. Research has shown time and again that when you talk to low-income families, what they need is someone who is there in times of need. If you don't help them when they're in the hospital, but only pay back the hospital bill 3 months, 6 months down the line, people still struggle in order to pay the bill. They still will need to take an emergency loan, sell assets, get funding from friends and whatsoever. And so you're diluting your own solution. So the key here is to be very quick. Think in terms of days, think in terms of hours. And that is really key. And that is, again, an area that you as an insurtech can help insurers to be very, very fast. But you can imagine it requires a completely new way of thinking. Too often claims at insurers, they are looked at from all different kind of angles in order to detect any possible case of fraud. You can't do that if you have a high volume of claims. So secondly, and that's in the sentence as well, you want to craft a, let me do this one. You want to craft a holistic solution. That means that think beyond insurance. So for instance, Bima, who started out as a mobile insurer and now is repositioning itself as a health care provider, they provide hospital cash. So for every day you're in hospital, you get a payout, but they also provide telemedicine. So you can call a doctor. They provide pharmacy discounts. They provide the ability to make appointments at the hospital so you don't need to go there and back. So all in all, what they're doing is they want to be top of mind when people have a health incident. And so these solutions, they should go beyond just insurance. They can include credit, savings, other kind of services that you can be there in times of need. And another critical point is that you want to design for high claims frequency, not high claims payout. You want to grow by word of mouth. So if you can have, say, 1,000 claims of $100, that's better than 100 claims of $1,000. Because in the first case, 1,000 people will experience insurance. If you do that right, they will endorse your product, they will tell their neighbors, and that's how you grow. That's how Pioneer grew from 1 to 8 million enrollments. People who were with other microfinance institutions, they went to complain and said, my neighbor is with MFI X, and they already received the payout when we had a storm. I'm still waiting. I want the same as that, or I'm moving to the other MFI. And so that is really what you want to do. And again, here you can help insurers to build that. Secondly, when you talk to distribution partners, MFI, associations, and whatsoever, you want to make sure you upgrade the core business. Typically, insurers, they will go in, and what they will do is they will pitch commissions. You get 20%, 30%, 40% commission. That's nice, but it's not enough. If you can help organizations to increase their core business by having more loyal members, by having more satisfied members, by making sure that, for instance, when there's a health, people can continue to repay their loan because they got an insurance payout, you're actually going to help them to improve the core business, which is of way more value. Ideally, you want to co-own the program. That means that you're not going in with a stack of products and just say, this is our offering and you can take it and this is what you get. But you want to design it together so that it is really tailored to the specifics of that organization. And lastly, you want to compete on value. Very interestingly, the graph I showed from Pioneer, they're not the cheapest in the market. They actually are quite more expensive in terms of product. They don't pay the highest commission. Still, they are the market leader. That is because they are known for the insurer that pays claim. And this links back to a previous point I mentioned, that is you want to make insurance affordable. That means that you don't necessarily want to create a cheap product. People are willing to spend on insurance if you make it affordable. What does it mean? If you have a $40 premium, that's too much. But if you put it into weekly or monthly installments, then it becomes affordable, because then people can pay $5, $10 at a time. And that is something that people are willing to do. And lastly, I think here's an array of things that you can also help insurers with. Internally, insurers first need to understand microinsurance, not as a short-term gain, but as the graph showed, as a long-term kind of purpose, because they want to be the insurer of choice, because they want to grow with low-income families. They need a champion. They need someone who understands how to run a lean business, how to do human-centered design and apply lean startup. But they need also the backing of a C-level sponsor, meaning the CEO who is there in times of need and who can say, hey, we are going to honor all of these claims and we are going to persevere. Like, you were a very supportive board to me that you need. And lastly, you need to adopt, and that's something, again, that insurtechs have an edge over insurers, is you want to use the methodologies that exist and have been proven to work on building a customer-centric design. So I'm showing this at you in a very fast pace. I will share a link to a webinar on this where I delve in way more detail on each of these points. I just wanted to give this as a backbone to set the foundation for our discussion. But these are the elements that we think are core to make a difference in microinsurance. The challenge is that you can't pick them from the menu and say, oh, I'm going to pick these two, and then I'm going to leave out the other 7. You need to have them all, and you need to have them all combined, and then there is an interplay. And that's where it's very challenging, in particular, because you don't have the full control. You need that insurance partner who is aligned. You need that last mile organization, if that's not yourself, who is aligned. And that takes time to build such a partnership. And that's why it takes time to grow insurance. But this is just to put in all of the caveats and warnings, but rest assured that if you can get such a partnership, it's fantastic to see how quickly you can grow and how quickly you can move ahead and adapt from your learnings when you get this in place. So, right. So my monologue, Elias, over to you.
Yeah, so quite interesting on how B2B2C can help microinsurance thrive, and basically looking at how then you look at organizing innovators, building partnerships, and developing more customer-centric solutions can be one way in which we can make this particular sector thrive. But maybe just a quick question in terms of what you've kind of highlighted from the microinsurance perspective. How can insurtechs support or basically address the challenges that microinsurance face? What is this connecting point that we see microinsurance and insurtechs kind of coming together, and what kind of challenges can they assist in somehow solving within the microinsurance space?
Well, honestly, I think in all 9 of these elements, there is a space for insurtechs, in the sense that having someone who can really run this as a very lean endeavor, as it is pointed out over here, what insurers need to do, that's not a natural habitat of insurers, but it is for in insurtechs. So insurtechs can help with designing solution. But maybe one key element here that I want to highlight is that if you look at microinsurance, it's not a product challenge. The biggest challenge in insurance is not having the right products. There's actually very mediocre products that really scale and very innovative products that fail. And the key challenge is this one, is to have these partnerships with these organizations who have a connection with the people you want to reach. And so that's, again, an area where insurtechs can come in, either by nurturing, developing these partnerships, or by being the last mile organizations themselves. For instance, saying we are going to work with motor taxi drivers, and as part of our offering, we plug in insurance. Obviously, also when it comes about being very fast in responding, that's a technology challenge that can help there. What we've seen, though, is, and I think that's another important caveat, that technology by itself is not just going to magically solve all of these issues. If you look at the large insurtech schemes, the mobile insurance in particular, from Bima, from formerly MicroInsure, from AO, what they say is that easily 80 to 90% of all of the enrollments, there has been a sales agent involved, not necessarily upfront, maybe when people kind of enrolled through an SMS and then had a call, but it's quite a number, right? So if you think that you can just build a fantastic app or a tool and then the technology will solve by itself, then I need to provide some pushback here. But technology and human touch go hand in hand. If you would only rely on human touch and only on sales agents, you can't grow in volume in a very effective and efficient way. So you need technology, but it's not only about technology. It's the and that you need. So, yeah, this is a very broad answer, I realize, Elias, and happy to get into deeper elements. But I see where the insurtechs really can have a contribution in each of these elements. Maybe not in all 9 at once, but I think that insurtechs can specialize in saying, okay, we can help you in making sure that you can really be fast in claim settling. We can help you in onboarding more clients very quickly, very efficiently. We can help you with connecting with those last mile organizations or we are the last mile organization, etc. Does that make sense?
Yeah. Yes, I think that makes sense. Maybe you kind of talked about how to add value, how basically insurtechs can add value to microinsurance. Maybe from the top of your mind, what is this key value? I know it will depend on the product and elements that the product has been set up, including the structure of the solution that has been put together within the microinsurance space. But what is this key element that stands out? You know, you've mentioned partnerships, you've mentioned technology and other things. What is this key thing that would stand out for an insurtech that maybe kind of bridges that particular gap of the challenges that the micro market is facing? And I know you've mentioned a couple, but which is this biggest one?
Yeah, stop sharing the slides so I can bring it back on if necessary, but then we can hopefully have a more engaged discussion as well. I think, Elias, it's about unlocking the potential. So insurers do see there's quite some potential. I don't have the numbers exactly right, but if I more or less, there's about 55 million Kenyans. Is that true?
Yeah.
And I've been told there's about 50 insurers who are reaching about 5 million. So that means inhabitants. So that means that insurers, they do see that there is an untapped potential of roughly 45 to 50 million people who are unserved. That's the blue ocean. They understand that there is little competition in there and that there is a big need. And they're all battling for that small retail market and there. But they don't know how, because it's an unknown customer segment with different characteristics, with different needs, so that you can't just push the product or downscale the product, with different payment preferences, with different abilities to pay, with different places to meet. So all of the marketing the elements that you need are all going to be very different. And I think that's where insurtechs can come in to help them to make these unknowns knowns. Like, you start from a lot of assumptions about it's an unknown product for an unknown customer segment. So insurtechs can help them to kind of to figure that out. So starting from the customer and saying, hey, we identify the customer segment that is in need for that has a risk and that is in need for insurance. And so help insurers to kind of to see, like, how can we solve a problem? How can we solve that risk? And being the translator in between the end customer and the insurer, between the distribution partner and the insurer, or being the distribution partner altogether. I think that's really where the insurtech can come in. Having said that, one of the challenges that insurtechs will face is that, and that has been the fate of some of the insurtechs in the past, is that how can you keep your added value if you don't own the customer? So insurers will maybe say, well, we're going to work with that insurtech and we're going to see and figure out what they do. And then we learn from them and then we just replicate it on our own. So I think the best place to be is to either be like a part of the technology provider, but then have to be very unique. But if you own the customer, I think then you're in the best position to make sure that you have an outlast value and that you serve the customer and that you have that ownership all along in your lifetime and your journey of your company.
Yeah, so that's very interesting. Unknown products to unknown market and kind of trying to figure that out. And how then do you keep what we call value added? You know, micro is highly driven by value added services. Maybe just to look at the current space, the current micro insurance space. You know, we've seen a lot of interactions with the incumbent insurance companies. How is the engagement process like? Because, you know, if, for instance, if you look at Pioneer, they decided to kind of look at that particular value from scratch, kind of complementing that with other lines. But in terms of these companies that term themselves as microinsurance, and they would want to kind of start with the first pillar that you mentioned of business to business by organizing and talking to innovators. What are the challenges that does these microinsurance companies face when they kind of approach the incumbent insurance companies? Because sometimes they might need to use these companies to carry risk.
So you mean when insurtechs meet insurers, the challenges?
Yeah, so the key thing I know that when microinsurers, because, you know, there are some microinsurers, they call themselves microinsurers, but they're not licensed. And they really want to engage with insurers for one goal of really getting to the market. How is that particular, I would say, experience like? Because I would want to kind of share that with insurtechs that are also experiencing some of the challenges or opportunities around these interactions.
So I think it's very similar if you're diving into the startup world and innovation and startups as compared to large companies, quote unquote, incumbents. I think a lot of the challenges are the same here in insurance and in microinsurance, which is that you're living on another kind of timeline and speed of movement and flexibility of movement. Insurers have a lot of procedures and rules for good reasons. They became large for a reason, and they are in business for a long time for a reason. And they are managing a lot of money from their clients. And so they need those kind of checks and balances. But if an insurer, have you ever a successful meeting as an insurtech with an insurer, and the insurer is excited and they will come back to you in 3-4 months, they find that that might be very fast. Whereas for the insurtechs, that's 3-4 months, that's a lifetime, because that's 3-4 months that you're burning cash. So there is a lot of that. And then you want to get into play, and then you get 3-4 months down the line, you get the agreement. Yes, we're going to work together. Well, insurtechs are very flexible. They can adapt. That's not the way that insurers typically work. So I think that's a lot of the challenges, is to get a good understanding of how do insurers work, what are the procedures that they need to go through internally to move ahead, to get the green light, to get to the next step, etc. And again, how can we help that? So who is doing what? On top of that, obviously, you have sometimes license issues. You might need to seek the regulator to get approval for some things, which is further slowing down. I think that, to me, is very often a very big challenge that I see, is that you're on a very short kind of timeline and horizon to break through because you're burning cash. The insurer has another kind of reality that they're working with. They're concerned about their reputation, but timing is not always, or fast to market is not always top of mind in terms of the risks that they see. Yeah, so I think that's one of the definitely one of the real challenges ahead. But again, you can go around that, I think, and you can find some solutions to that. If you are aware of that, you can see, okay, how can we proceed already awaiting the feedback from the insurer or the regulator.
Yeah, so you mentioned also something interesting around the regulator. I know we've seen close to, I think, 10 countries kind of putting some regulations around, I would say, microinsurance. Have these regulations really enabled impacts to be realized within these particular countries, or these are just documents that have not really enabled growth of this particular sector? Maybe kind of speak to us on how these microinsurance regulations have kind of supported, or I don't know whether they have supported or not, but I would want to hear whether these have kind of managed to get some impacts around micro insurance markets.
Now I need to be careful because I'm getting on your domain, and this is where you're way more experienced than I am. So feel free to answer itself. But maybe one thing that I can say about this is that very often I've seen that the regulator is a bit of a scapegoat and is the one to blame for not making progress. And yes, obviously, regulators can make one's life very hard, or they can facilitate it a lot. But if you look at all of the growth of Pioneer, they started with microinsurance without there was any regulation with regards to microinsurance in the Philippines. And so they just find a good way of working with the regulator, with finding an alignment and progressing within, obviously, the boundaries of the law. And so I think that is a mindset that that you need to adopt. And I think, again, where startups excel at is like, what can we do, but also how can we engage with the regulator? Because ultimately regulators, they want to, again, Elias, this is your domain, but on one hand, they have like, one hat is prudence, is that they want to make sure that the money that insurers manage, which is money they have on behalf of their clients, that it is safely managed and done. And so there needs to be some safeguards. But regulator supervisors typically also have a second mandate, which is to make insurance accessible, inclusive for all. And I think that's the area where you can speak to the regulators. And I think BimaLab is the testament of that you indeed can you create a sandbox? Can you already experiment with some things that have been done elsewhere, etc. And there I've seen that if you approach the regulators in a good way, that very often they're very engaged and open to kind of to listen how you can help them to reach that second objective. But Elias, feel free to expand on this, because this is your area of expertise.
Yeah, so that's right. Yeah, so I think properly taken by you, prudential components on looking at the stability of the market and also just ensuring that the market remains stable. At the same time, really the customer protection role, you know, that's really also an important aspect. Yeah, so you mentioned that you've managed to have a journey with over 74 founders or executives of companies. Also, you've kind of had an experience with Pioneer. What are these typical microinsurance products? Maybe can you give us an example of a typical microinsurance product, real product that you've come across? Because the team here, some already are working on different products. They're looking at their customer portraits and all that. Maybe you can give us a few examples of the products that have gone to the market. Maybe a couple from Pioneer, or maybe some products that you've come across. and what are these most compelling products that come from that particular space of microinsurance?
Yeah. It's an interesting question. So it's very often a question I get. I get very often early in a conversation, like, okay, what are the products that are successful so that I can copy those to my market? That's a strategy that won't work. I think it really starts with gaining a deep understanding of customer needs, of the specific customer segment. So for instance, even if you work with two microfinance institutions, one MFI has another client demography and profile than another MFI. So just because something works with one MFI doesn't necessarily mean it will work with the second one. So for instance, with Microinsurance Master, so we start with a 2-week immersion that will happen in Kenya next July. It's only in the second week that we start talking about products. It really is more about partnerships and how can you align with a partner? How can you really understand the customer needs that also add value to that partner and that you can solve? So that may be as a caveat to get started. And I think what successful products have in common is what I shared on the slide, is that they are affordable. That doesn't mean cheap. Again, on different occasions, we've already seen that people are willing to spend money on solutions that help them to solve the risks, but you need to make it affordable. When do they get their paycheck, if any? When do they get typically a revenue? And so how can you work on that? So for instance, Pula, they're trying to see that you pay your insurance premium at harvest, because that's the time you get some money. And so how can you do all of that? So I think that's a space that is really important. Secondly, is how can you be there in times of need? And so again, this is where you really need to be very innovative with. And so to give you a few examples, for some inspiration, the key product at Pioneer that gave them that huge growth is a calamity cover, which is in the Philippines. There is about 20 to 25 typhoons, hurricanes, monsoons, or however they're called, that are hitting land a year, 2025. So if you're insuring typhoons, for sure you're gonna get claims payout, right? And
yeah.
The thing is that it's like always hitting one region. It's not like it's like all over the country. So the risk is somehow spread, because then 1 year or 1 season it's more that region and what have you. But it is a risk that is top of mind, because everyone in the Philippines is exposed to that. It's also a risk that everyone is well aware of. People get trained, there is a typhoon alarms. It's in the media already ahead of time that a typhoon will hit land and what region. And so that would be typically a risk that insurers shy away from, because, I mean, for sure you're going to be hit. But if you want to be customer-centric, you don't want to start with developing a solution or a product that is third or fourth priority of people's mind. People are struggling to get through the day. They're struggling to get through the week. Why would they want an insurance for something that is like low on their priority list? But if you get on top of their priority list to get to the risks that people keep them awake at night, then you have something that you want to that people will care about. And then you need to find a way that it kind of embeds really well with what they do. So for instance, the calamity cover of Pioneer, it's sold through a microfinance institution who has that outreach, not only for selling, but also for helping them to settle claims. So what they do is the moment the calamity has hit land, the day after, they go in the area. Pioneer doesn't do that alone. They do that with their partner, and they literally go and see how many walls are still standing. And for each wall down, you get an amount. So immediately you get a payout. But I like a lot, Elias, the kind of solutions that are very seamless, because very often people say, well, insurance is really difficult. We need to educate people. But I think if you bring it very close to what people are accustomed to, then it makes a lot of sense. And one example that I can give that from closer by is from the Microinsurance Master Naka Live in Zimbabwe, that you also know of, is who designed a cow retirement scheme So if you would go into the market and ask people, would you want to save for your retirement, for your old days? I mean, people are struggling to cope with the next day. Why would they even bother about like what's happening 20, 30 years down the road? So that's a risk that they would like, yeah, not now. But people do buy cattle and cows and animals for their rainy days. That's a way of saving. And so what they've done is they designed a solution, which is that you can buy cows by the kilo, by the kilogram, and it's quality meat, it's export quality meat. So what is interesting there, it is actually sold in dollar. Zimbabwe, as you know, has a really high inflation. So if you would save in the local currency, it wouldn't really make a lot of sense, because you would get pennies from that investment return 10, 20 years down the line. But you don't need to explain insurance if you say, why don't you come us and you buy cattle? We have a quality ranch. You can go and visit the ranch. You can touch your animal. You can even take it out if you want. But you don't need to explain insurance, because it's something that people do all along. It is such a natural fit. And I think that is, again, what you can really design as a solution, is to see how does it naturally embed with what people already do. How does it help them to kind of level up what they're already doing in terms of coping with risks, like the funeral, the burial societies, the funeral groups that you have. How can you tap into that? People are already doing that anyways. People are saving for funerals and spending a lot of money on that. So instead of coming with like disrupting that, how can you build something on top of that? And there's some great examples on that too. But let me pause and see if you or people from the audience maybe have any questions.
Yeah, quite great examples whereby you can buy a cow by a kilo. That's really, really fantastic. Maybe I'll open it up for the audience, because I still have a couple of questions. But let me just pause there and see whether we can have a few questions from the audience. You can unmute and ask your question. You can tell us your name and your InsurTech or your organization. Yeah, so anybody in the audience with a question?
Good evening.
Good evening.
Yes, well, it's here in Mozambique. It's almost evening, so I don't know what's your time in Kenya, but then I suspect it's afternoon.
Yeah, closer evening. Yeah, I think
Great.
we might be at the same time zone, but yeah. Anyway, great to have you.
Thank you so much for having me. I would like to first say thank you once again, Bert, for giving us this lessons of microinsurance, which is indeed a very different kind of master, if you allow me this term. Actually, I'm also part of the academy that Bert created, and we are finding very hard to actually, let's say, copy with the demands of this niche market, because when we are speaking about microinsurance clients or customers, the approach indeed should be very, very different. So I would just like to head in on top of what Bert shared about selling the cattle in kilos, because for instance, if we have a health product and we want to put it available or make it available for the mass market, then we cannot, of course, at least here in Mozambique, we cannot speak about health cover with that kind of, with that segment. We need to come up with an idea that says, why not saving for the time that you will need when you are with an emergency, let's say, or for instance, pregnancy for ladies who have complicated pregnancies. Why not save while also taking advantage of the cover in a form of medical consultation? So it's indeed a very true fact. And we are realizing that in microinsurance, we always have to look to the long term while being very innovative in a very daily basis, because of the risk that these people face. They're very volatile. They change in just a glimpse of an eye. So that's what I would like to add. Thank you so much.
Thank you,
Thank
Enrique.
you.
Great to have you here. So Enrique is indeed one of the masters from Mozambique. High admiration of what he does. This is the first dedicated microinsurer there. And I think he speaks to a lot of the points that I mentioned earlier. So for instance, Enrique had to be very patient for the waiting until they got the license to get started. But he well used that time to do further market research to better get to know the customers. And again, also to discover that, which is at the start, I see very often very tempting, low income customers, like you have like, it's not a very homogeneous group, right? You have market vendors, you have rural farmers, you have urban dwellers, you have like a whole kind of different kind of subsegments. And if you're starting out, it's tempting to think, oh, we are going to cater for all. But that's not how it works. You need to be very, very specific on a very specific market segment at the start. And I think that's one of the things that Enrique did really well when they started out, is to understand, okay, let's go into the markets, let's listen to what they say, what they need, and then how can we tailor it for this specific market? And from there, then you can grow. But if you go and want to serve all, in the end, you're not serving anyone, because you go with a very generic kind of solution or product that is not appealing to anyone in particular. So great going, Enrique. Thank you for sharing.
Right, thanks, Enrique. Any question? Good to hear that experience from Mozambique. Dara, and then we go to Pazio.
All right. So I think my question is still around product, and maybe still on the pioneer question. So there's always that it's easy to say focus on one niche and try to double down and create that value proposition initially, but actually stick to it. So when I look at Pioneer today, Pioneer, I can hardly tell what products they actually sell, because they sell almost everything. They sell travel, they sell health, like real large line of insurance, right? So what was like the top products that they focus on? So are you did they focus on a product that helped them to capture large market size, or did they just add multiple products to grow? Hope you get my question.
Yeah, but again, I think that what I want to encourage you is not so much to focus on the products, because a lot of the products that they have, they grew organically from the needs that the customers expressed. So and so they have products that are volume drivers and that are profit drivers, so to speak, but it's all started from customer needs. So one of the things that, for instance, insurers typically do is go to a distribution partner, say a microfinance institution, and say, all right, this is our product offering. We have accident cover, we have hospital cash, we have a funeral, and And which product would you like? Okay, you would like a funeral product. So we have a funeral product that's $10, and then you get 20% commission. What do you think? What do you want? So if you do that, you're entering, without you knowing, into a kind of a price comparison market, and you're competing on price. Because if I'm the MFI and you're the insurer coming to me with that kind of a proposal, then what will I do? I want to make sure that you provide giving me a good deal. So the moment you step out of the room, I will call another insurer, and I will call insurer Elias, and I will ask him, hey, we're interested in fuel cover. What is your terms and conditions? And the terms will be very complicated, but I'm hearing that he's saying $12 and I get 30% commission. So what I will do is I will get back to you and I will start comparing on price. Whereas, Pazion, if you would go to the MFI and say, hey, what are the needs of your customers? Well, maybe we don't know. All right, so tell me about your portfolio. What are the risks that you faced? Oh, okay, we face risk of our customers that when they pass away, or somebody in the family passes away, then they are cash constrained and they can't return their loan. All right, okay. So what do you think would be the ability to pay for that? And okay, maybe it's $8, maybe it's $9, maybe it's $12. All right. And how much do you want to earn on that if we would package something like that? Okay. So you think your customers can pay $15 and you want to earn 10%, or maybe nothing because you just want that the loans are repaid. So this is what we can offer instead. And that's where you co-design something with your partner. And so the moment you get to your insurance or you get out there to last mile organizations, associations, and you pitch your products, you're going to compete on price. And you maybe win this time around, but next year another insurer comes by who undercuts you on price, who pays more commission. Whereas you want to compete on value. And if you can tailor your solution so that it naturally fits with their offering, it's harder to get competed on price. Also, what some insurers do really well is that they're not only competing on or providing a share on the revenue, which is a commission, but also on the bottom line. That's true partnerships. When you say, well, let's share profit and loss together, and then you align your interest, because it's not just opposite alignment where the insurer thinks, oh, they're just trying to sell more in order to get more commission. But if you are sharing profit and loss, you have skin in the game. You are both want to make sure that you have a quality sales, not just like a lot of sales. So that's a very broad answer to your question. But what I want basically to say is that don't focus too much on one product necessarily. Maybe you want to specialize in health or agriculture and these kind of things. That's okay. But don't narrow too focusedly on one product, and even don't focus only on insurance. Maybe part of the solutions are outside of the insurance spectrum, but are helping people to cope with risks. For instance, because you add telemedicine that people can call, because you give discounts, because et cetera, et cetera. So there's a lot of things that you can do, I think, and that's where really I would like to encourage you to take a very broad understanding of both the end consumers and the potentially the associations or organizations. It's like, what are the risks? What is top of mind, and how can we help them to build a solution? And then you might find that the solution or the products are not that spectacular. They could be funeral, they could be health, they could be other kind of life insurances. So, but it's the way you package it, to tailor it, that then really adds value to your customer. That is really where you add the value. Does that make sense?
Absolutely. Thanks a lot.
Yeah, so great insights there. Let's try organic growth is crucial. Issues around customer needs, holistic solutions, and kind of competing on value. Some of the key sentiments that kind of override creation of these particular products. Pazio?
Okay, thank you very much, Brett. It's been really, really wonderful to hear the sort of practical aspects of Pioneer. Now, I was just reading what made them successful is partly, as you mentioned, for example, the area is risk prone, right? You have tsunami. So if there is an anticipation, especially after the fact, people tend to sort of protect themselves, right, from such calamities, right? Now, when you look into some of the markets, like in Ethiopia, such as people tend to buy when they have a need, especially in the sector that I'm in, the health sector. In agriculture, there's a successful microinsurance model Kafia has run. Some of Kafia colleagues are here. In fact, we're planning to collaborate, us from the tech side and then from the actual insurance side, Kafia. Now, but even that microinsurance is partially subsidized by, the government and NGOs and what have you. So how do you build purely a sustainable model that do not rely on such entities, right? If NGOs are always subsidizing it, the tendency of creating a sustainable growing insurance product might be difficult. That's one. The second part, the part that I kind of mentioned earlier, if people are sick, if you offer them health insurance, I understand increasing enrollment and then increasing payout, although it's little, but the frequency kind of builds traction and repetition, and then people might tend to increase word of mouth. People will have an opportunity to hear more about it. But if they are enrolling during the time that they're sick, doesn't it create a burden? Now you have to do heavy payouts, right? And then so the I was just designing the curve. The curve do not even align, and then all of a sudden you're in debt and you cannot be able to pay out the health sectors and the service providers. So how do you create that balance? And then understand education is key, but just looking into the culture of buying when you need it, out of pocket is what's accustomed. So those are kind of two things: sustainable growing sort of enrollment and also creating a balance. Thank you.
All right, that's a few questions there. On the subsidies, I think you have both systems that indeed subsidized products, non-subsidized products. For instance, even in Kenya, you have a public-private partnership on agriculture, but you also have purely self-funded structured insurance schemes. So obviously, what you can afford, what you can do can be different. The challenge with subsidized programs is that they never tend to last. And so how can you outlive the subsidies, so to speak? Depends on scheme by scheme, but that's definitely a challenge. There is things that, I mean, obviously, as I mentioned, in agriculture and in health, there are quite some schemes that are just on a purely for-profit basis. And even quite some health schemes that are challenged, typically the hospital cash products that actually suffer from too low of claim payouts. So they don't see enough of claims. And so people don't know that they're insured, or they don't go to the hospital too often. So then that's a place where you can increase benefits. So I agree with you that you wouldn't want it to get into the doctor's waiting room and start selling insurance there, because then what you're going to get is what insurance calls adverse selection, which is that people who are sick, they want to buy, but then what about your healthy groups? And this is, again, one of the reasons why you want to be cautious with selling directly to consumers, but preferably to partnerships. If you work with a microfinance institution, if you work with associations, and you can insure all of the farmers of that association, all of the members of the MFI, or they do the promotion, that means that you already have a group that is vetted, that is kind of has done some screening because they're part of that membership. So that are ways to mitigate some of the risks. Sometimes it's also that you need to enroll your entire family. So that's family policy, so that you're not just picking the sick child, but like all of your children that need to enroll. But then again, you come the balance between affordability at play. So there's definitely ways to think about this, to how to adverse selection. But I think the best way is to see how you can tap into organized groups. That is what I would really advise, to see that if you're just going to allow everyone to join, then what is your criteria? How are you going to select people? Whereas if you're working with association, with organized groups, with burial societies, with MFIs, with farmer associations, with cooperatives, then you can structure this differently. They can do part of the promotion. They have already also a reputation, a trusted relationship, et cetera, et cetera. So that's going to help you there.
Yep, great insights there.
Thank you.
Yeah, thanks, Fazio. More of like how then for sustainability and creation of sustainable models, you might need to tap to organized groups and kind of see how that can kind of impact your model. So again, building true partnerships is something that is crucial for these particular components. Maybe before I get somebody asking a question, what are some of the challenges that you can come across on these partnerships? I know, do priorities change, whereby you've kind of got into a partnership with, say, an MFI, and their objectives kind of do change. How can that impact the microinsurance market?
Oh, definitely. Yeah, it might change. People might change, and then you might need to start all over again. So I think one of you want to also be very strategic about building partnerships and not making sure that you're not relying just on one key contact, but that you build a trusted relationship on the different levels, on the CEO level, on the execution level, etc., and even in the field, so that you as a partner, that when things go wrong in the field, they don't need to escalate to the regional and then the CEO level, and then in your organization, even you're still lean and small, only you get to hear it from the CEO. You want to be connected on the field so that you immediately know what's happening and you can really adapt and adjust and what have you. So that is definitely one of the things there. And that's also one of the challenges, I think, that, as I mentioned it before, the timing to get started is one thing. The way to the mobility, the flexibility to change over time is another. And ultimately, as you might have seen on the slide, is that in each organization, you typically need two kind of profiles. You need to have both at the distribution partner and at the insurer side. You need to have a C-level sponsor, the CEO who understands that this is a long-term endeavor, that it's not just about short-term profit, but that there is a bigger ambition, a bigger goal, a bigger value proposition, which is more loyal clients, better clients, growing with clients when they graduate out of poverty, whatever. But there is that bigger mission, which kind of helps them to endure in difficult times. But you also need a champion. You also need someone who is executing on the vision, who has that passion and belief and wants to make it happen. And so you need to have these two roles. And that's definitely one of the challenges if you work with these organizations, that sometimes you have a CEO who really says, yes, we want to do that. But if you don't have someone within the organization who can execute along, who can kind of provide you with the go-ahead, with the insights, who is your partner in crime, it will be very challenging. And again, that's something that you can maybe do in the early days on behalf of the insurer, but at some point you need to do that. And I think you also want to educate your partners on this, on how things work. And the better they understand how it works and be a partner in crime and understand and also have skin in the game and have an understanding, the longer you can go. If you keep it as a black box and say, we have that as a service, but whatever we do is trade secret, then you create mistrust. It won't really work in challenging times.
Great. So here we see elements of being in touch with the partners for the success. Maybe getting somebody at the top and also basically getting somebody on the ground for implementation purposes. I think that's a very...
Yeah, if I may add to that, and it actually links back to the graph at the start. You want to make really good understanding and agreement and expectations in the good times. What I see is that too often in the good times, organizations internally, but also partners, fail to get right expectations. So everyone thinks like, oh, this is going to fly and it's going to be fantastic. But how do you define success? That's why I asked the graph, like, where do we need to be? And typically, as with any startup, people like to refer to vanity metrics, like, oh, we have 1 million, 3 million, 10 million. But in the early days, you won't have a lot of those. So how do you find success if you only have 10,000, 20,000, 50,000 clients? And that's a lot about the learning experience. How long did it take you to onboard a new client? Are you speeding up? Are you getting more efficient, more effective? Are you increasing the speed? And these kind of metrics, that's the metrics that really matter in the early days, and that you need an alignment on that.
And that basically brings me to this question. You kind of brought in some elements of KPIs and elements of some things that needs to be tracked. So maybe from a microinsurance perspective, what are these key performance indicators that always come out, and how is the tracking kind of achieved? Because I know, as you mentioned, the likes of Pioneer have had to take a long journey to be where they are. What are the key metrics that will kind of give you an indication that, yeah, we are doing the right thing, or ideally, look, this is not going to happen and you might need to rethink. So what are some of these KPIs and how do you make decisions around them?
It's a great question. And it's the one that I always ask as well whenever I interview insurers. Like, we remember the graph and then year 5, where they had 5 million of income and 7 million of claims. So if you're at that junction, what are you looking for? What are the things that that make you believe that you still want to persevere, that you still want to and I think it really comes back. So in terms of ratios, I think you want to have a combination of both the kind of the classical insurance, which could be your claims ratio, which is giving you an indication, your speed of claim settlement, but then really calculated from the moment an incident occurred, not only like from when you received the file. You want to see the frequency of claims. These kind of metrics you definitely want to track, but you want to be patient on those, because again, in the early days, your premium growth, it might not be as spectacular as you want it to be. But then you also want to have a set of learning indicators. As I said, like how many, like your funnel, how many potential partnerships do you have in the pipeline? How is that growing? How much time does it take to onboard new clients? How is that progressing? How much faster are you getting there? So these kind of signals tell you that you're progressing on something. And as you know, learning from failure, but failure is good if it is learning. And so what are the learnings from there? And I think in the early days, it's really a lot about learning. You're still small, so if you make a failure, it's not as costly. And then when you fail, when you have millions of clients, so you really want to treasure those failures in the early days, but you want to learn from that and grow from there. So it is that blend with like the learning objectives, what works and what doesn't work, what is the kind of promotion that works and doesn't work, and constantly be learning. And so, for instance, when I asked this question to Pioneer, like at that junction, year 5, you have way more claims than you have premium income. They just had that trust and belief on the one point, because on the top line, the board and the management, they had that vision that we want to be the insurer of choice. And so that means that it's in good and bad times, you want to be the insurer of choice. But also they were picking a lot of signals from the field that their partners and clients liked what they were doing, that they were actually really excited that Pioneer was there, and that they actually wanted them, encouraged them to do more and better. And I think that was kind of also what gave them the faith and the belief that we're onto something. We get more and more organizations that come to us that because they want to partner with us. We don't need to go out there to get new partnerships. People are coming now to us. The word is spreading that we are an insurer that is different. And I think that's the kind of combination of signals. But you want to make sure that you really open and very transparent with your board about that. Because if you are going to promise them the moon and only year 3 or only year 5, you're going to be saying, hey, our numbers don't look good. Then you're in the defense. You need to defend. And then suddenly, oh, but you know, this and that and that. Whereas if you are very proactive and very open about like what is happening, what are some of the challenges, you get a more empathetic board that thinks along, that understands the challenges, that understands that that there are some setbacks and et cetera, et cetera.
Great. So
some Elias, key... I'm not sure why, but you're laughing.
Yeah, so some key elements in there. There's something that you mentioned that there's need to convince the board. And again, you know, if you come from a traditional role of an insurer, these guys are always looking at the top lines, what is coming in. And it's usually quite difficult to kind of tell them, look, the patience of the likes of Pioneer is something that needs a lot of convincing. What are some of the things that you can use to convince these people? The guys that would want to see some of these results turning around in 1 or 2 years.
And you mean as an insurtech?
Yeah, as an insurtech, what can you use ideally to provide some form of convincing to see this more on a long-term value rather than a short-term value?
There's a few answers that come to mind, but one thing that I've also seen with insurers is that, again, most insurers, they really do recognize the market opportunity, but they also still, after growing the retail, growing cooperative, and this is like just another one. And it's not kind of bringing the most revenue. It's not going to be the most exciting one. And quite some insurers also ask the question out loud if they actually have the capability of being so lean and nimble and flexible to do this. And again, this is where insurtechs come in. So some say, well, maybe we just need to acquire companies that have done this, or we need to kind of venture it out, or we outsource it. For instance, I made reference to Bima. Bima is invested in by Allianz. So Allianz said, well, we might not be able to do this ourselves, but we can invest in that company and learn along. So that's also one way that you can attract investors who understand the business and the game, who have another perspective than the typical private equity investors, because they are from within the sector. They're not looking at it as something that they want to sell, and they want it to see as grow their market. And I think that could be one value proposition that would be appealing to some insurers, is to say, we don't have the time, the focus, the resources, the human resources, etc., to do this. But if you can kind of help us to build that market, that could be something that we are interested to work with you and invest in you as part of that. So that could be one way to approach this and to look at this.
Great. Yeah. So let me see whether there are more questions in the room. Well put in there. Great comment from Christian. That journey is more important than the duration. Business understanding, partners, commitment, and customer focus should be the key drivers of this. Great comment in there. Any question in the room? If you have a question, you can put it on the chat. Maybe I saw a question from Kifia. Gatechu, for health microinsurance, for health microfinance, how can we build a benefit of packages that caters to a low premium while also reimbursing claims with the current rise in inflation? So more of like, yeah, premiums are quite low. You need to still meet claims that are currently facing inflationary pressure. How do we kind of balance that?
It's a good question. I don't have the answer, but I can give you some elements. And actually, this is maybe, if you want to have one key takeaway, then it's this one. It's actually one of the masters as well, who's running a microinsurance company, once told me that I don't have all of the answers. But one of the things that I learned from the program is that I know where to find the answers. And it's very easy. It's with the clients. I'm speaking against my own business, but it's not the international consultants who will come and tell you how you can design that. You just want to be very good and a very good listener and understanding of customer needs. So for instance, when it comes to health, it's not always as clear cut. What is the real issue here? So getting a good understanding of that is that. So for instance, in some occasions, for some groups that we had such exchanges with, they said, well, actually the problem is for us to get to the hospital. In the hospital, there is also solidarity that comes at play. It's not ideal, but for us, the biggest challenge in times of need is how do we get to the hospital, because the hospital is not nearby.
Yeah.
Others have told me, well, you know, again, hospitalization, that's where the solidarity kicks in. So we get actually then contributions from family and friends. But it's like the outpatient care, when we have a malaria and the small things, that's something that we are supposed to carry on our own. And that's sometimes also very unpredictable when that happens. And so that is sometimes challenging, more challenging for us to manage our cash flow. So it's listening to these things. The reason why Bima included one of the services is making doctor's appointment is that people often spend 1 to 2 days just traveling to town to get to the hospital, to make an appointment and to go back. That means transportation, sitting in the hospital, waiting, getting the appointment, going back. That's 1 2 days they had to spend that they couldn't work just to get the appointment. So sometimes part of the solution, it's not like the full solution, but part of the solution you can find in those interviews, not focus group discussions, but in individual interviews and understanding what were really the real issues that people face. And that comes back to the techniques from human-centered design and etc. Is ask about past experiences, not so much about intentions. We all have good intentions, but we always fail on being more healthy, doing more fitness, eating less snacks. But what is the last time, what happened the last time you did X, Y, or Z? And why did you do that? And what was the problem? And that's where a lot of the insights will come from. So yeah, in short, let the customer be your guide.
Great. Yeah, there's a very interesting question here again for you, but what silent growth indicators can be adopted as positive KPIs when an insurtech is in early stage?
That's indeed a good one. I think that what I would seek if I was an investor, which I'm not, unfortunately, but I would want to be excited about seeing the progress that you're making, the learning progress. What are your learning objectives and how are you progressing towards that? Again, for instance, in number of signups, so how much quicker are you getting signups? And maybe you are pivoting your product 3, 4, 5 times because of that, because you're getting the insights and then you're pivoting and you're testing a newer version and et cetera, et cetera. But that would be like the one that I would be excited about to see is like your user take up, both in terms of end customers, but also in terms of partnerships, because that is really what will signal that you're speaking to a need if people want to sign up. And then the other element would be retention, which is another challenge. There's a lot of focus on customer onboarding, but there's a lot of people who try insurance once and just to test it out, but then abandon it again. And that's very challenging because that's like a running tap of water, and then you're filling your bucket, but there's a hole, and then your bucket will never fill. And so if people, do you convince them that there is value of insurance? So that's when they onboard, but do they stay? That's when they actually see the value. And that a third element will be your, and fourth is your claims ratio and your claims frequency. So those things would be the ones that I would like to see. If you look at ratios, it doesn't really matter about like where you are right now, because that's a snapshot, but it's the trend, the evolution that matters. How do these things evolve over time? And maybe it's not about the top line again, because that might not be as good, but like you have one partnership, in that one partnership, how is it evolving there? And then you add another partnership and then dilutes your overall claims ratio. But then partnership 1 compared to 2, and then seeing what is happening here and there. I would like to see a lot of testing and learnings from those testing, and that you get the confidence and the proof that you're evolving, that you're speeding up, that you're getting traction, that you're ticking off all of the assumptions that you have and validating those assumptions. That's what I would be looking for in an early day.
Wow, very interesting. From the people value, partnership value, to more of numbers, not really focusing on the numbers at the start, but kind of looking at the evolution of those numbers as time goes by. Good insights in there. Another question from Pazio. Are there similar examples from what you've mentioned? You kind of talked about Pioneer as a successful model and case studies. Are there other examples or case studies across various sectors? So another example outside the Philippines?
Yes, sure. I mean, yes and no. So to be fair. Sorry. Oops, I lost you there for a moment. So yes, I mean, and that's what is, I'm really privileged to be working with these 74 masters in 31 countries and to see really how they are building what they're doing. Again, in the early days, the numbers are not always as exciting, but it's fantastic to see the progress that many of them are making. Why Pioneer is such an inspiring case is because the longevity of it. So they really have like that track record from the early days to now. There's not a lot of insurers that have reached that level yet, where they really can say, out of a potential market of 80 million, we have about 20. That I haven't seen yet. But it's fantastic to see how quite some insurers are really growing very fast and making some progress. And it all, the ingredients are every time the same. One, for instance, that comes to mind is AO in Zambia, who in a country of, if I'm not mistaken, 13, 14 million inhabitants, in about 18 months grew to 1.5 and now 2 million insured. So where you can see that in that partnership they have between insurer and MTN, how that resonates and how there is a lot of signups there. I have, for instance, a recent one is Jamie one in Ethiopia, another insurtech that is providing an app to organize the Edirs, which is the burial societies, and how they've plugged in a funeral cover in there, and that they also have seen, if the numbers right, out of about 100,000 members, 30,000 who signed up for insurance. So you can see, if you have the foundations right, that there is a lot of growth there, and possible growth there. Yeah, and I can cite a few more, but there's just a few of them. But to your point, the same kind of huge outreach as Pioneer has, I haven't seen that yet, but I'm confident that more pioneers will come out of in the open in due time.
Right. Yeah. So kind of makes me to think, should I get hold of somebody from Pioneer? Is something that we are going to see. You mentioned IO, Zambia. There's also Jamie One and all those types of good examples coming up. We will kind of see how best we can also get them to share some of their experiences. Yeah, so very good insights. Let me see whether there is one last question, because we are basically coming to the end before we release. But any burning question from the team here? Right, so let me then go to the last question. Maybe, but if, let me see whether, no, there's no question in there. I saw a chat coming through.
That's mine.
Yeah, so maybe if you look at the microinsurance space, what really excites you in the future? What are we likely going to experience in the next coming years? Are we going to really address the 300 million people that really need this solution? What are these things that excites you if we look into the future of microinsurance as we end?
Oof, that's a challenging question, and it's on tape, so I need to be careful, because you're gonna play this again in a few years from now, and then I will look like a tremendous fool. I think what I find really exciting, promising, and encouraging is how insurance that is already out there for a really long time and has not yet lived up to the promise when it comes to serving low-income communities, is still and increasingly embraced by more and more organizations and players as part of the solution. I don't think it's a full stack solution necessarily, but we see that governments are developing PPP programs. You see that multilateral organizations like UNDP and German government with Insure Resilience and other important players are seeing insurance as part of the solutions that they want to tackle with, in particular, climate change. But I'm also very encouraged that in the many conversations I have with insurers and with an array of organizations, how they really want to embrace insurance to provide the necessary risk alleviation tools for the people they serve. And that to me is very encouraging. And so in that sense, that links to what I said before, it's only a matter of time before we see more pioneers coming through and stepping forward. It will require dedication and a long-term view. But again, as here now with 43 people sticking out to our conversation, I think there's a growing group of people who share our passion and belief for insurance as a way to solve much of the burning needs of low-income families. And I think that together we can build more and better microinsurance solutions. And that's both the beauty and the challenge is that no one can do this by itself. It is a partnership. We need to work together. It's beautiful because there's a lot of sharing in the sector of best practices, of lessons learned. We'll need way more of that. And obviously that's also the challenge because these things change over time. It's not like, as we discussed it, it's like fixed in stone, people move on and leave, and then you need to kind of get back, but it's also part of the fun. So I really would like to applaud everyone who's here, who's part of the BimaLab, as in particular, for what they want to do, for the contributions they want to make to improve the lives of so many more people. I really do hope that we can get your dreams realized, because ultimately it's for the bigger good of all of us. And happy to support you however I can. Shared my details in the chat, so feel free to reach out to me if you have any follow-up questions. And to your earlier point, Elias, you can. I will also share. I had a conversation together with Lemmy Manje with the leadership of Pioneer. It's a 2-hour conversation similar as this one, where they walk through their entire journey. So I will share the link as well afterwards so that you can disseminate it and so that people can watch it at their own pace and so that they can learn more about that. And also have another one on how to thrive, the slide I showed second. So there is enough more materials that people can digest at their own pace when they want to learn more about the things that I shared here.
Great. Right. So quite a good ending. You know, what you've mentioned, that there are various pathways to build resilience across the continent. We've kind of seen risks kind of evolving, and that basically presents opportunities for all of us. And that is something that we are excited to look forward to, as you've mentioned. And I believe that, yeah, we are a team of champions that are really going to enable these pathways to be realized by supporting this particular continent to build the resilience that it really desires and it really needs. So mine is just to thank you very much for sparing some time to speak to us. I think this was really, really insightful. We've really learned a lot, particularly from who I call the microinsurance, the main microinsurance master that is building and other masters across the continent, and with one goal, just creating those pathways for resilience. So thanks a lot, Bart, and we'll be kind of getting much more connected to you. You've also agreed that if anybody has a further question, please, you can reach out to Bart, or you can still reach out to us. We'll be able to get you connected. Otherwise, mine is just to appreciate the time that all of us has taken to share and to listen, but also just to see how then we can become part of the solution. So mine is to appreciate all the people that have taken their time to join us this evening, and looking forward to interact in the other sessions. Thank you and enjoy the rest of your evening, guys.
Thank you so
Bye
much,
for now.
Elias, for the great moderation and your time. I'm not a master, but I'm trying to master it eventually. It's a journey and we're all on it. And so I'm really glad to share it with you as well. Thank you, everyone, as well, on my behalf for sitting this through, and looking forward to our further engagements.
Thank you. Bye for now.